Welcome to Meet the Disruptors, 2 days of free online events exploring key market challenges brought to you by Ditto, the B2B tech marketing practice. Thank you for joining our panel discussion, Legerity in Action with Millennium Consulting. Today we'll look at how Legerity's FastPost accounting rules engine allows the rapid adoption of new accounting standards including IFRS15 and IFRS17 and creates a future-proof platform for digital finance transformation. We've got a mixture of slides and animation today to take us on our journey, and please visit ditto.tv/MTD straight after this webinar ends for a digital hangout with our panel, me the moderator, and other audience members. So first, some introductions. I'm Mike Richardson, COO of Ditto and Campaign Manager for Legerity, and I have the pleasure of moderating today's session. I'm joined this morning by Jeremy Wood, CEO and founder of Legerity, Mark Miller, Head of Client Advisory at Legerity, and Phil Keat, CEO and founder at Millennium Consulting. Just a little on me. I've had over 10 years experience in digital marketing, specializing in content, SEO, paid media, and social media. I've been with Ditto and Legerity for 2 years, focusing on insurance and insurtech and developing content including webinars, white papers, case studies, podcasts, and video. I'm also an associate of the Chartered Institute of Marketing. So if I turn to Jeremy now, if you could please introduce yourself, Jeremy.
Well, yes, many thanks, Mike, and thanks to Ditto for the invitation to participate in the event today. My name's Jeremy Wood. I'm CEO and founder at Legerity. My career dates back quite a long time in IT. I started back in 1985, so now well into the fourth decade in my career in technology sector. Over the last 28 years, I've really focused on startups. I've had 5 startups, 3 of which have focused on what we're talking about today, accounting rules and subledger technology. So Legerity is our 3rd generation of solution in this space, leverages cutting edge application design, modern cloud-based open source technology.
Brilliant. And if I could turn to Mark, could you please introduce yourself?
Yeah, thanks. Hi, I'm Mark Miller. I'm the head of client advisory at Legerity. So I'm a chartered accountant, trained many years ago in PwC as in financial services. I had the pleasure of working all over the world in line roles and in transformational type projects. I spent a lot of time trying to deliver business insight to key stakeholders in the organizations, and of course working on projects to enable that to happen. So I've got quite a lot of experience of how difficult that is, and it was a great pleasure to join Legerity 3 years ago, where we have a platform that can do exactly that, and we've been working, as you'll hear, within the telecom space and insurance space over the last few years.
Brilliant. And Phil, if you could please introduce yourself.
Yeah, thanks, Mike. My name is Phil Keat, and I'm the founder and CEO of Millennium Consulting. So we have been around since 1995, when I set up the company to support organizations migrating to Y2K compliant ERP and finance software. So we've had a long road in terms of helping organizations on their transformation journeys. And post Y2K, we've moved into sort of e-commerce and digital space and working with all manner of organizations across sector, helping them with finance transformation programs.
Brilliant. Okay, thank you. Good morning, everyone. It's a pleasure to be moderating today, and thank you for taking part in today's discussion and sharing your insights. A note to the audience, this webinar is being recorded, and you can enter your questions into the chat in the GoToWebinar side panel. You can see there on the right. We'll be stopping this session as close to 12:40 p.m. as possible, at which point we encourage you all to take part in the digital hangout taking place at ditto.tv/MTD. To start this morning, I'll give a short overview of the topic. We'll look at telcos and a use case around IFRS15. We'll then look at Legerity's work with insurers to comply with the IFRS17 regulation. Next, we'll have a broader look at finance transformation. There'll be time, like I said, at the end for audience questions. And the panel will then sum up with one closing comment each, and we'll move to the digital hangout for any further questions you might have. So The world is changing fast, and firms need to embrace financial transformation to keep ahead. Telcos are more than network providers now and need finance systems to support a rapidly changing business. Insurers are solving the regulatory challenges of IFRS17 today while laying down the foundation for a future state architecture. To succeed, the modern banking back office needs frontier solutions to deliver automation, regulation, and transformation. Finance teams are constantly asked to do more with less. Gartner recently stated that out of 85% of finance teams are currently undergoing or planning a finance transformation. However, 70% of finance transformation initiatives fail to deliver the forecast benefits to the business. Legerity FastPost, a third-generation leading-edge accounting rules platform, is solving these complex, cumbersome, and processing-heavy finance risk and regulatory problems. It gives firms the tools to simplify processes, improve reporting, and drive massive scalability. It also delivers value to your entire firm, providing a quicker route to market for new products while reducing the cost of business as usual. So let's start with regulatory challenge telcos have faced in IFRS 15 and how Legerity helped leading mobile connectivity provider Bitter Group gain greater control and insight through contract accounting. And we've got a short video to tee us up for this subject, so we'll just watch that video now. So, Jeremy, following that video, can you just talk us through what is IFRS 15 and could you talk us through the challenges Bitter Group were facing?
Yeah, yeah, sure, Mike. Happy to do that. So IFRS 15 was is a relatively new accounting standard. It sort of addresses core revenue recognition, and it first went live in January 2018. And it impacts firms the most and the sectors the most that sell bundled products and services across multi-year contracts. So telco was a sort of prime example. And if you look at the standard itself, it sort of addresses that, ensures that aligns contracts with effectively a series of performance obligations. So these performance obligations are attached to the contracts, such as in telco, the delivery of a handset or the provision of a monthly network service. And revenue can only be realized in line with the performance or delivering these performance obligations. Whereas before, the previous standard, things tended to be mixed up a lot, and things were used for discounting and issues around, the netting of different parts of the contract and different set-offs against the different product lines. But by breaking all the parts of the bundle of the products and services to the individual standalone selling price, it also addresses some of those discounting issues, whereas before, there was overzealous revenue recognition. So it's all designed at a standard across sectors, and particularly here the telco. So that sounds fine, complex enough, but actually, if you look at the life cycle of a contract as well, things are never straightforward. And things happen, events happen over the life of a contract, such as in the telco world, upgrades, downgrades, site grades, family plans, suspensions of contracts, terminations of contracts. So when you put all of that into the pot, it's a pretty complex standard, and it has quite a significant impact, again, across sector, but specifically in the telco for us. So when you look at the impact internally, it has a big impact on finance departments and some of the supporting existing systems. And if you look at, a lot of finance departments that are based on still legacy systems, a lot of the logic and the accounting standards are pretty hard coded into their systems, and changing them tends to be pretty costly and high risk. So Bitter, like many firms in that sector, was looking for a sort of a more modern, purpose-built application or solution that would meet their IFRS 15 requirements. And of course, as with all projects, they want it to be implemented as quickly as possible, as efficiently as possible. But also a lot of firms, particularly in the telco sector, don't want any disruption around their core billing and operational systems, because those are very difficult. So it had to be implemented in a sort of seamless, non-disruptive manner with the existing systems. So that sort of sets the scene for Bitter. Yeah.
Brilliant. And what were Bitter's criteria for selecting a solution?
So, so they had a number of things. You have both sort of functional and sort of technical. And as with all these projects, they're reasonable sized projects, and you have to go through firstly a comprehensive sort of market and vendor selection. So we went through the typical RFP, RFI type process, because the investment they're making is obviously significant, and the solution will be with them for a long time. So Bitter were very specific. It's a very modern firm, provider of mobile connectivity in the Baltics, covering Lithuania, Latvia, and they were very specific on what they were looking for. If we look at the sort of technical checklist they had, because of the nature of how they wanted to implement IFRS 15 at this very granular level, which we'll sort of talk about in a moment, they needed a very high performance solution, because the number of contracts and number of changes to the contracts meant they're dealing with millions of transactions. So firstly, highly scalable, high performance. They also, as I said, needed to go down to this very granular level. So they needed a solution that was architected specifically for that. And with Legerity, we use in-memory data grid processing, allowing millions of transactions to be processed in minutes. So we're only a small part of the end-to-end process, which frees up a lot of time for, adding value to the results. So that was one thing, that it was very scalable. The second bit was around the use of open source technology. As many companies, they've been using proprietary infrastructure before, so expensive Oracle-based technology and those type of things. And they have a modern target operating environment where they wanted to use open source. And again, Legerity is based on best-in-class open source infrastructure. And that's what we built from day one. So we certainly met that requirement. So that was sort of from a technical perspective. From an implementation, obviously having a partner that knew what they were doing and had a track record of delivering these type of solutions was important. They look at vendor sort of expertise to help them. And as specialist accounting rules for vendor, Legerity's, we've been doing this for many, many years. I'm vastly experienced in delivering accounting change, finance transformation programs. And importantly, we'd already delivered a number of IFRS 15 projects. So combination of our SME knowledge, people like Mark worked on the program and provide implementation advice and guidance, and our out-of-the-box configuration. So we always turn up with a pre-configured system, so they don't have to do the sort of the key thinking of applying the standard to the solution. We've already done that, and so the system was ready to use. We did fast implementation and implemented it ready to use within 6 months.
Fantastic. And I mean, as well as compliance with IFRS 15, what additional benefits did Bitter Group gain from the project?
I think there was a number of key things, and again, we're big advocates of using compliance not just to get over the line from a sort of a mandatory regulatory perspective to get the tick in the box for compliance, but there's no reasons why this type of architecture built around accounting rules and subledger can't be a major step in the right direction for finance transformation. And I think with the implementation at Bitter, that was definitely, on their agenda firmly to drive additional business benefits. So we sort of talked about some of the options. So one of the options or benefits of FastPost, that's our platform, is that it allows firms to process data at very granular levels. Many accounting systems still, work today on an aggregated or summarized levels, and even for IFRS 15, and Mark will talk about with 17, the default solution is that you process data at portfolio or at contract group, so very high level of aggregation. But by processing at a more granular level, it provides firms with deeper insight into its business and marketing, and allowed Bitter in this instance to approve, company planning and performance through the detailed tracking of contract progress. So as I said, these contracts are in certain instances, multi-year contracts. It's typical to buy or subscribe to your service over 2 years, and by doing accounting at a very granular basis, you can see how that contract progresses from a profitability perspective over the course of the lifetime. So that was one aspect. I think the other thing that these programs really focus on is around data quality and data management. An accounting rules engine is a data-driven application. So we receive data, we subscribe to data from core operational systems like billing systems and cash management systems. And as part of that, it gives an organization a good focus on actually what is the availability of data and what's the quality of data. And part of that is data ownership as well. So as part of the implementation at Bitter, they had the opportunity to review and improve data ownership across its end-to-end process. And that certainly plugged a lot of the gaps that, firms have that grow up over time, where you sort of use manual systems and manual processes and spreadsheet stores to manipulate data. So, that's another benefit of these type of projects. Audit and control, that's the nature, that's built in as part of the DNA of an accounting rules and subledger. So visibility across the end-to-end process is a core thing. So the auditors like that, obviously. And then the final thing is actually the accounting standard itself. All these accounting standards are designed to give commonality across performance and results across the industry. And when you are a firm and you can get measured against your peers on a standard basis, then that brings benefits as well. So, some firms may see these as more overheads, but actually they're all designed, these standards, to provide, a more even playing field, shall we say, across the industry on how you present your results and how you're marked against your peers.
Brilliant, thank you, Jeremy. So that's IFRS 15. So let's turn to a similar regulation in the insurance industry. IFRS 17 is a complex industry-wide change in the regulatory framework that insurers need to adhere to, impacting their actuarial, finance, and IT departments. So now if we go to our second video, looking at how Legerity have been transforming the insurance industry with their FastPost platform and helping insurers become IFRS 17 compliant. Fantastic. So let me turn to Mark. And Mark, like I've said, IFRS 17 represents a seismic change to the way insurance firms account for contracts. Can you explain why the incoming accounting standard is a once-in-a-generation opportunity for firms to deliver massive business benefits?
Yeah, thanks, Mike. I think the first thing to say about this is that it's really an opportunity to get investment in the back office. So we have the insurance industry has had to deliver Solvency II, but we saw a lot of insurers were able to cobble together a sort of standalone application that could basically deliver the Solvency II numbers and the reports. And with IFRS 17, it's a wholesale accounting change, and that's not really possible. So you really do have to open up the back office processes, the finance processes, and invest in that area to deliver IFRS 17. So, as we've mentioned already, that means bringing together IT and the owners of data, the actuaries and the finance teams together. And often currently, they can operate a little bit in silos with, questions over the fence sort of thing, but IFRS 17 demands that this is all brought together. So that's in a way an opportunity, but of course a challenge. And you can target just getting over the line for IFRS 17, but it's not too hard to just expand that a little bit more and introduce automations and centralization of data that help eliminate end user computing, silos of data, and the problems that those kind of activities have. And again, with this investment sort of point, even if you don't go for compliance on day one, you can set in place with the right architecture a roadmap for sort of digital transformation going forward. So, the business case in the beginning, with the budget that's given may not stack up for full transformation, and you may not have time for that, but you can put in the components that then enable you going forward to set in place for digital transformation in the back office and to keep up with developments in the front office.
Fantastic. There are a number of complexities to IFRS 17, different approaches, GMM, VFA and PAA, data management and integration, and various options for transition. So why might an MVP approach to achieving IFRS 17 compliance be an attractive option to insurers?
Yeah, well, I think at this stage, certainly an MVP could be very attractive to insurers who haven't started. I think IFRS 17 is a particularly complex standard, and if anybody's tried to read it, it's actually not easy to work out what you need to do to comply with it. So that takes quite a little bit of work. So, I think looking at solutions where that heavy lifting has already been done takes away a lot of the problem for insurers, and that can mean speed and cost of implementation is much less. So there's a lot of expertise and experience that we've put into our MVP solution, in the sense that we had the luxury of working with a number of advisory firms early on IFRS 17 and how it works. And of course, we've got loads of client projects in operation currently where we can pick out the best of the ways that it can work. And particularly when we're looking at an MVP, that means what do you really need to get over the line? So there are a lot of options within IFRS 17. It's not a list of what you have to do. There's some options, there's some flexibility, there's some different approaches that can be taken, and our MVP is really based on what is the most streamlined approach to getting you over the line for that. So I think that's why it's an attractive option for insurers, because you've got something that basically works out of the box, and you just have to understand that and then integrate your data into that. And on the integration topic, of course, you've got a defined target, so you know what data you need. So your data people, your IT people, know what they need to deliver. Actuaries, many smaller companies have very poorly resourced actuarial teams in terms of numbers of people, or even in terms of systems. So again, having a clear target and the simplest approach on the actuarial side, and then obviously having all the finance processes predefined so that it's clear to the teams how the numbers can get produced. So that's a real advantage. But at the end of the day, one I think is really important about our MVP is you're not just buying compliance. You have an application that then can set in place this roadmap for digital transformation. So it's still an enterprise class application, still a very powerful tool, and we already see other clients, once the projects get underway, thinking about how they can expand the scope to look at other areas. And you don't necessarily need to do that as part of compliance by 2023, but you can start to get an idea of what you want to do going forward. So I think that's, in the here and now, MVP gets it done quicker and more effective. And then at the same token, with an application like ours, you've still got that benefit of that roadmap for transformation going forward.
Fantastic. And we saw it quite nicely animated there in the video, but Legerity promote a right to left approach to IFRS 17. Can you, Mark, expand on what this means and why it's so effective?
Yeah, so it's about having a target, I think. So when you're confronted with a complex problem, it's easy to, go off on tangents down different branches. So how do we calculate the risk adjustment? What's the best method for projecting cash flows? What discount rates to use? There are lots of discussions that could go on for an awful long time in the organization, depending on what your perspective is. So we start with the target, and ultimately for compliance, that's the report. So we look at the reports, what's needed to populate those reports, and then from that start point, obviously we can be confident that if we can do that, then that ticks the compliance box. The insurance company is going to get over the line in terms of delivering IFRS 17. So we look at that, and then we're able to say, okay, how should we structure the accounting object? So the chart of accounts and the dimensionality that is needed in the accounting application to deliver those reports. So then we have those structures in place, and essentially it's a finance standard. So that means we've reduced it down to a set of transactions effectively. And I think insurance companies traditionally aren't always focused on a transactional point of view. And I think that is a very important insight that we've had, to take the reporting and convert it to a transactional type view. And from each of those items, we can then see what kind of data and calculations we need. And that's how we define then our data API. By knowing all the target transactions and reporting that we have to deliver, we can see what data we need. And then we can structure our API, our tables that we receive the data in a way that is disconnected then from that complexity of accounting and calculation, but is more related to the data itself. So we can have tables for cash flows, tables for rates, tables for policy information, things that people who own data would recognize, and that separates then that accounting complexity and actuarial complexity with the data discussion. And that, the simpler API is easy to work with, but it also means getting that populated is much quicker and easy. So that's why we focused on the right to left approach, because on the focusing on what we need to deliver, make sure we only deliver what we need. And then on the other hand, it means we have a very clear target in our API about what data is needed to deliver it, and we can present that in a user-friendly way.
Great. And just lastly, before we sort of move on to talking about finance transformation more broadly, why is it important, as well as solving a client's regulatory challenges today, to lay the foundation for digital transformation tomorrow?
Yeah, well, I mean, as we've sort of been talking about in some of these workshops, is digital transformation is here and now, and there are rapid developments across all industries in terms of product development and the way companies interact with their clients. And obviously with COVID-19, we can see that accelerating as well. A lot more sort of remote and dynamic type products are required. So digital transformation is not going away. And as we mentioned at the start, the back office doesn't often get investment first. So it's very important that we take this chance to look at regulatory investment as not just a sunk cost to deliver regulation, but an enabler for other things. Because And companies that take advantage of this time to put in place architectures that have a long roadmap will end up doing a lot better than those who do not. And that doesn't mean you have to put in place a full transformation, as we've said. It means just investing in the right kinds of technology. So don't invest in technology that's towards the end of its roadmap, that has a limited set of scope or functionality. You need to invest in technology that is at the forefront of technology, with a good roadmap and with a wide sort of use case. You know, I've been reading some books about evolution, and I think it's very interesting when you look at the sort of processes involved. You know, something as simple as, you know, a light sensitive patch on the skin of an early animal, you know, within geological timeframes, that suddenly explodes into a complex object like an eye. And I think that's the case here. You know, if you put a really fantastic new piece of technology into your infrastructure at a point in time, it doesn't necessarily have to do with what's going to happen in the future, but suddenly that opens up an enormous range of possibilities, and that's where you can really help with your digital transformation.
Great, and thank you for that. It's really fantastic metaphor there for exploding evolution of technology. So now in this concluding section, we'd like to talk about finance transformation more broadly. And thank you, Phil Keat, for holding on the line while we get to this section. But first, let's just look at our third short video on the subject of finance transformation. Great. So turning to Phil, and to start, I mean, what are some of the clear benefits? I mean, what are some of the clear benefits to finance transformation, and maybe some less obvious benefits that our audience maybe haven't considered? And I think you might have to unmute yourself, Phil.
Digital transformation, the move to the cloud. There's so many things that are happening these days. I think one of the major issues that we're encountering in our finance transformation activities is all about data and data quality, and I think that's one of the reasons why, you know, Legerity and similar technologies are so important now in terms of the volumes of data that finance departments need to operate now. So I think data is one of the key areas that we're focusing on now. I mean, our journey came initially from basic ERP and finance systems going back to the early 90s, and the challenges they had then were very different to what's been going on now. And I think sort of e-commerce, cloud, and data have made a massive change to the requirements of the clients that we tend to deal with in terms of improving their overall performance. So yeah, I think data is crucial, is key.
Fantastic. I mean, Jeremy, is there any sort of additional benefits there that the audience maybe haven't considered, or maybe some clear ones we haven't covered already?
I think and I think hopefully we summarised it in some of the videos there. There's a whole range of finance transformation benefits, and it depends on where your firm is currently. Not all, most firms come from this from various different perspectives. Some are very legacy in nature. Some have looked at certain processes and improved them over the years. But the ones that we typically look for, firstly, simplified processing across end to end, automation wherever possible, which gives reduction of errors, reduced levels of recs, and ultimately improved audit and control. So that's a key sort of benefit. If you look at current finance processes, a lot of them are sort of supported by a lot of spreadsheets and manual processes, which are inherently risky and not very efficient as well. So you've got simplified processing. Once you've got simplified processing, that drives a whole bunch of other things. Ultimately, we're looking for reduced costs as well. Automated processing will reduce your costs, both from a sort of support and technology perspective. Close periods, that's been a target for finance departments for many years, was to move to faster closes. And then ultimately we talked about granularity and better data, improved reporting and business insight. So I think those are sort of the some of the things that people should be focusing on, and those are real things that can be delivered. On the sort of the less obvious, I think this is something we recognize at Legerity. We employ a lot of graduates and millennials coming into the frame. They want to be kept interested and busy, and give them interesting things to do rather than just problem solving and looking at data problems and errors that have cropped up. So it's turning that whole process from a sort of 80-20, where we're spending 80% of our time problem solving, now to 80% value. So added value into what they do. So keeping people interested and motivated and using their skills properly. Yeah.
Fantastic. And just turning to Mark quickly, is there anything, Jeremy's probably covered a large sort of portion of it, but is there anything you'd like to sort of bring out there in terms of benefits?
Yeah, I think it's the unexpected, isn't it? So, as we talked about, you sow a seed, and then more, things can happen that you didn't expect. So, for example, COVID-19, remote working. If you've got cloud-based applications, cloud-based processes, all of a sudden, these things aren't the threat anymore. And then suddenly you think of that, and then you say, oh, well, we can maybe reduce office space because we can do more remote working or work from different locations, or maybe outsourcing becomes more of an option for some of your processes. So I think that's the key thing. As Jeremy said, even considering the kind of quality of people and what they do for your organization, these things suddenly become possible. So I think that's the less obvious benefit, is the breadth of change that you can put in place within your organization, given that sort of transformational starting point.
Fantastic. Now, turning back to Phil, we've discussed quite a few verticals today in terms of telcos, insurance, and maybe touched a bit on banking as well. And we talk a lot about using accounting rules technology as part of finance transformation. Have you got any examples from Millennium's perspective on some good use cases where people are using tech as part of their finance transformation?
Well, we've worked on a range of clients across the UK and Europe on finance transformation, going back many years before regulatory standards were a key driver for change. I think in the last 4 or 5 years, IFRS15 and 17 in particular have become key areas of activity for us in terms of compliance. But I think over all the years, I think finance transformation has always been an aspiration of finance departments as they seek to become a better business partner for the board of directors. I think we now recognise that technology has a really important part to play within the finance space, and I think most companies these days value technology. We are all technology companies nowadays, really, and it can make a massive difference in terms of performance. So yeah, we're seeing finance embracing technology even more than before. So yeah, it's a massively important area.
Fantastic. So I'm going to push ahead. I'm conscious that we've got maybe sort of 4 or 5 minutes left. So if I turn to Jeremy, decisions firms make now will stay with them for 15 years or longer. And Legerity have a Finance 2030 blueprint. What does that phrase mean, and how does it influence the FastPost platform's development roadmap? And I think you're muted, Jeremy.
I think your point there, Mike, is well made. You know, systems live for 15 years or longer. In the world of finance, they often live a lot longer than that. And there's reasons for that. You know, finance system replacement's complex and costly, so you don't want to do it too many times, and the choices that you make will be with you for many years. 15, 20 years, as you said, is not uncommon. In fact, on Mark and my sort of trip around the world over the last 3 or 4 years on IFRS projects, we sort of keep a running tally of what the oldest finance system is that we've come across, and we came across one in the southern hemisphere for a pretty large firm, global firm, that was 40 years old. So, you know, it's been in place, and actually there's no chance of replacing it within the next year or two. So it will be around even longer. So the systems you choose, and importantly the architecture that you implement, is a massively important consideration. But you've got to marry that as well in terms of a picture of how your business will look in, say, 10 years time. So in 2030, may seem a long time away, but the decisions you make for finance systems architecture is going to be with you, and it will take you past 2030. So having a clear view of where you think your business will be is good, but that's, again, very challenging. So we've developed a Finance 2030 blueprint, which is in essence a roadmap for how we consider third generation finance systems architecture should look, and what are the core components and what are the underlying technologies that you should be looking at that will really future-proof your organization and provide you with this highly flexible, agile platform that can adapt to your business. Some of the things you aren't going to know what your business looks like in 10 years' time, so you need this level of agility. You know, businesses, I think we can all say that businesses need to be highly agile and ready to deal with all types of changes. Certainly we talked about innovation at the front end, so consumers, you know, more demanding, want differentiated products, buy them when they want and how they want. They want to pay for them in a very efficient manner. So that's going to put, again, more pressure on the back office. Who are your competitors? Well, you know, there may be the traditional competitors that you deal with today, but there's going to be new entrants and challenges as well. And where's technology going to be? And then you've got environmental changes and COVID. Who could have seen that one coming? So, you know, there's a lot of variables here, but to have a view of what your architecture looks like, you know, we believe is an important thing. And because we've done this for so many years, you know, that we think that we can help and give advice to clients and firms out there based on our experience. And, you know, at the end of the day, this is what we do. So, you know, that's part and parcel of what our Finance 2030 blueprint is. It's all built around, you know, agile, rules-based technology. We personally, having seen it and been involved over the last 4 decades, you know, the appetite for wall-to-wall ERP replacement, multi-year, multi-million-dollar implementations, I think those are fastly becoming the legacy systems of today. And I think what people want is more agile, rapid deployment to incrementally improve processes that can be delivered in 30, 60, 90-day agile sprints. So I think this rules-based approach, you know, it's an approach we started working with many years ago, but actually business conditions, economy, environmental conditions lend itself to having this. So it's really sort of come of age.
Brilliant. So again, conscious of time, so to round off, let's have one closing comment from Jeremy, Mark, and Phil. If there's one thing that you'd like the audience to take away from today's discussion, what would that be? I'm going to start with Jeremy, and if we can all try and keep our answers to 30 seconds, that would be fantastic.
Okay, well, I'll run through it. You know, I think just building on what I just said, finance transformation doesn't have to be complete revolution. I think, you know, if you take an informed evolutionary route based on new rules-based technology, you can really make major steps forward, not just from a accounting compliance perspective, but, you know, building a corner or putting in place a cornerstone for the future and financial and digital transformation.
And Mark, if you've got one final thought for everyone to take away with them.
Yeah, just that you know, I think we've talked about the finance transformation point and the roadmap, but of course, don't forget the here and now. You know, we can get you over the line simply and easily with a pre-configured minimum viable product type solution, and that's the here and now. But of course, you still get the possibility of this great roadmap into the future.
Brilliant. And just turning to Phil, if you've got one thing you'd like the audience to take away with them today.
Yeah, I think my final thought was I think COVID-19 has sort of emphasized the fact that digital transformation and the ability to embrace cloud and work from home on multiple devices, whether it's iPads or laptops or phones, I think these are all things that are becoming increasingly important. The world is definitely changing and evolving rapidly, and it'll never be the same again. We're going to have to think of how we can embrace a lot of the technologies that are coming through now to survive and prosper into the future. So I think we've got to be open-minded.
Brilliant. So again, many thanks to our panel for sharing with us their insights. To find out more about Legerity and the services they provide, for a copy of today's slides, or to discuss any of the topics covered today, please get in touch at info@legerityfinancials.com or visit legerityfinancials.com. This session has been recorded, and a link to that video will be shared via email. Now, if you could please all visit ditto.tv/MTD straight after this webinar ends for a digital hangout with our panel, me, the moderator, and the other audience members. On screen now, you should see the other events we have happening throughout the rest of the day. But until then, just to say thank you very much to Jeremy, Mark, and Phil, and our audience for attending. Thanks, guys.
Thanks very much, Mike.
Cheers, Mike.